All right, part three: accumulation, manipulation, distribution. All right, everything we doing is building up. So start paying attention here. You need to write this shit down. All right, so all markets, stocks, forex, options, whatever chart you're looking at, all has phases. It moves in waves. All right, it's not gonna go straight up or straight down. It's gonna come up, retrace, go back up. You know what I'm saying? It's gonna be moving in different phases, and you want to catch the phase where it's going to go in the direction that you're trading. All right. So accumulation. Accumulation is a pause or consolidation in action. All right. If you wanted to go up, it's going to accumulate either after it manipulates price or hits a significant price point. Okay. You don't want to be trading accumulation. You want to get in while it's about to start going up. So you see in this situation, I got GU and I got EU. All right. It's important that whatever asset class you're trading, you want to have a correlated asset right next to it to see what it's doing. And I'll explain that in a minute. Manipulation, that's the fake move. All right. Price opened up right here, right? This is midnight. 0 0 at the bottom, right? Friday 13th, 0 0. It hung out for a minute and then it dropped down. It dropped down to do what? To fake people out. So now people are wanting this to go lower, but it exploded higher, all right, above the open. Okay. That's telling you that that's manipulation at play. Also, where the low forms will tell you if it's manipulation. But the most important qualifying element for knowing what manipulation is the time. All right. This low is going to come between, if it's a classic buy day, it's going to come between 2 and 4 a.m. Sometimes 1. But 2 and 4 a.m., if it's a classic buy day, a low is gonna form in that time. I guarantee you. I'm gonna show you so many examples and so many live trades. You don't like that's what it is. If it's a buy day and it's a classic buy day, it's gonna form a low between 2 and 4 a.m. It's gonna expand up. It's gonna come back during New York session. It's gonna pause a little bit. It's gonna take a low out, which might throw you off to make you think, oh, it might be going back towards this low. No, that's another manipulation tactic. ICT calls it SMT. SMT is smart money technique or smart money tool. I just call it SMT. So it's basically divergence between correlated assets because if this took this low, right, and EU made a higher low, that's telling you that that's a significant event. All right. If this did not make a lower low, but GU did, they're supposed to be doing the same thing. You get what I'm saying? And if it doesn't take this low out, that means this is a stronger pair, and it's more than likely going to keep going up. Why is it going to keep going up? We're in the New York kill zone, so the time qualifies what's going on. If this happened at night during the Asian session, don't nobody care. Nobody trading Asian session. This happened during the New York session. People are trading, so this is important. So it made a low during the London session, came up, expanded, retraced, went back up again, retraced again, didn't take a low out, but GU did. Okay, you can buy under here. You can be a buyer when it takes this low out to ride it back up. You can be a buyer at this higher low point to ride it back up. Choice is up to you. We're going to get into examples eventually, but you got to get these concepts down. All right. Distribution. That's the real move. You want to be heavily closing the bulk of your positions between 10 a.m. and 12 p.m. Why? Because it's either going to come back down and start retracing or consolidate. It's not going to keep going up all day. All right. Every market has its limits. Despite what you may believe, every market has a limit, especially Forex, because it's too heavily manipulated. All right. We're dealing with currencies. They're not going to let the dollar go up all day. They're not gonna let the euro go down all day. It's gonna be moving in specific times after specific things happen. So I want you to understand this. This shit is not random. If you show me a chart, I can show you exactly. I can break it down for you, show you exactly what it did, why it's doing it, and when it was more likely to do it. Seek and destroy days, that's bad. You don't want to trade them days. Classic buy days, classic sell days, reversals. It's not random. Okay, it's doing things for a reason. So Like I said, anytime you pick a pair, if you pick GU on this day, you want to pull up Euro USD next to it, and maybe even DXY dollar index. That's a negatively correlated pair, right? You want to look at them side by side. You want to see if that low got formed between 2 and 4 a.m. It can be 1 sometimes too. So don't think if you see a low at 1 a.m. that it's invalid. It can form at 1, but I really want to see a swing low form on the hourly chart. Listen to what I'm saying. On the hourly chart, I want to see a swing low form between 2 and 4 a.m. I don't want to see that swing low get broken. So if I was coming into a New York session like this, let me draw it out. If I came into a New York session right here, let's assume this is 7 a.m. I'm gonna put a 7 right here. 7 a.m. Put a 7 a.m. right here too. Put a 7. I'm putting it right here at this high. That makes more sense. Right. If I came at 7 a.m. to my chart, I don't want to see this low that was made in London get broken. I don't want to see it. I want to see it remain intact, untouched. I want to see really fair value gaps in this range. In this range up, I want to see fair value gaps. I want to see order blocks. I want to see breaker blocks. I want to see something because in New York session, this low is going to bounce off of one of those things I just named. It's going to bounce off that to continue its move up. Okay, that's very important. You don't want to see this low get broken. Now it can come down here and take this low. It can do that. Say it's a news event happened, like CPI came and spiked down. It can take this low and still be valid for a buy day. It could just be grabbing liquidity, but ideally, I'm gonna show you how to do all that. But ideally, you want to focus on this setup. You don't want to see the low of the day get broken during the New York session because that's going to invalidate majority of the setup. If you're new, you're going to be tripping. You're going to be confused. You're going to be trying to force something. It could be reversing. You don't know because you're new. All right. You don't want to see that low get broken. I'm going to keep saying it because it's real important. You do not want to see it happen in a classic buy day. For a classic sell day, just flip this over. Just flip it over. I'm gonna draw it just so for completeness sake, but go down here. So we got it's gonna open up, it's gonna come up to a PD array, an imbalance, liquidity point. It's gonna do something, it's gonna bounce off of between 2 and 4 a.m. 2 and 4 a.m. Not 2 to 5. I know the London kill zone is 2 to 5, but you want to see that low or that swing high form between 2 to 4. When we get to more examples, I'm gonna explain why. So you want to see high forms right here, 2 to 4. You want to see it expand lower, but not too far. You don't want to see it come all the way down, just a little bit. You want to see it retrace up. It might form a swing high. It might take it. That's fine. As long as it doesn't take out this high. You want to see it go down. Completing the move. All right. That's the SMT version. I'm doing non-SMT version. So you want to see it open, trade up, trade down, come up, form a swing high, boom, retrace, failure swing. You're going to go down. It's ways to know when SMT is more likely to happen. It's ways to know when it won't. I'm going to show you all that. But once again, we got to get the concept down. All right, we got to do the boring stuff first. So going back up here to this buy example, low today in London, retracement in New York, expansion in London close, closing most positions. You can trade the manipulation. You can be buying the low today, but it's a little advanced. We'll get into that later. You want to buy during the accumulation. Why? Because it's pausing, it's consolidating, it's waiting for the next run. And that run, if it's a classic buy day, is going to happen during the New York session. Okay, off a PD array, off a PD array, or off a liquidity point. It's going to take a swing low, which this did, and then went up, or it's going to bounce off a PD array, which this is signifying here. Like it's probably an order block, or a breaker block, or fair value gap, or something right here keeping this up for it to go higher. All right. So once again, accumulation is the pause or the consolidation, the move before the move. The fake move is the move you don't want to get caught on the wrong side on. Okay. It's important that we realize that the open is right here. So I'm gonna put open right here. If you're a buyer, you want to buy below or as close as possible to the open price. So if you thought today's gonna be a buy day in London and you bought under the open price, that's good. You don't want to be buying when it's way up here. It's already gone. You see how it dropped down here below the open in New York Hill Zone and went back up? That's what you want to. That's where you want to be buying at. Okay, buy below the open. If it's a sell, just do the opposite. If it's a sell, you're gonna sell above the opening price. The open right here, this line, it got back above this line, and then it sold off. All right. So we'll get into more examples, but this is the framework for a classic buy day, classic sell day. A low in the London session, an expansion, a retracement for the New York session, an expansion again to close out the day. All right. If it does take the low of the day out, it's not a classic buy day. It's another type of profile. But the only profiles we focusing on is classic buy days and classic sell days. All right. So get that through your head, sit on it, watch this video a few times, and we'll get into more specifics coming up. Maybe in about 2 videos, we'll get into the nitty gritty.